Tremendous. It has been too long since I've heard the lovely Australian lilt.
Thanks, Frazer.
Yeah.
Um, yeah, great to see you
It's
guys
gotten
today.
even more charming because you're making so much money. Uh,
Yes.
and thanks for making the time. I know we've talked about doing a podcast together, which actually we've written outlines. So I'm delighted that I was able to coerce you into doing at least some kind of interview today. Um, would you start? And I hope you don't mind, because we're definitely going to talk about how you're thinking about the business and the success you've had there and how you're thinking about the future. I do find your personal story to be so compelling that I hope you don't mind talking about growing up, going to Australia, being involved in, entrepreneurship with your family at a very, very young age. Maybe just talk us through a little bit how you think you might have gotten here, maybe early seeds for what made you kind of tough enough and risk taking enough to start PactFi.
Yeah, definitely. So I think that story arc is really interesting because I think it shapes how I think about how businesses work, and obviously like some of the ways we have thought about scaling at PactFi. So my parents were immigrants to Australia in the late 80s, early 90s. And specifically, they immigrated to Australia on these kind of like student or research visas where my parents did basically research into like cancer research. And at the time, my dad was doing a PhD, but obviously we had kind of like a big family. I have um, another sister who was like really young at the time, and some of our grandparents were living with us. So I think they felt like they couldn't really like support the family on sort of this like for people who've done like PhDs and stuff like that. It's like quite a small allowance. So they
PhDs are not famously well compensated.
Yeah. And so I think like they wanted to kind of start something on the side to help supplement the family income. And that grew into sort of like what we would like kind of consider a small business. So mainly did like retail stuff like selling sunglasses and things like that. And that kind of happened when I was around 10, and I like was kind of working in the business from a young age. And I think it was really interesting from an operating perspective. I think it kind of like, I did kind of like just like sales and things like that, which built up sort of like an appreciation for sort of sales facing things and skill sets. But generally speaking, like if you've ever worked with small businesses, the majority of them kind of get capped at a certain scale and they don't really get much bigger, and they kind of like taper out sort of thing. So I specifically wanted to understand how bigger businesses worked and how businesses actually scale to this like really large size. So I was really motivated to join like a large company when I finished school, and so that's how I ended up at Deutsche Bank. And when I was at Deutsche Bank, I kind of did more product stuff, which allowed me to get exposure to a range of different industries and kind of like think about like what makes these businesses tick and succeed over time. Particularly in the last few years I was at Deutsche Bank, I actually was specializing in restructuring or special sits, where you're actually looking at a lot of businesses that are in decline or bankruptcy. And that is also super interesting in the sense of it sounds counterintuitive, but it just kind of gave me a really strong appreciation for how market structure and market, forces can really drive the outcomes for a business over time. And so like we kind of think about a lot at PactFi where we sit in the overall market, and how we leverage these kind of forces and trends to like the best effect for us as a business as we try to scale.
Tremendous. It's funny. We tend to see, I would say, two flavors of entrepreneur. There is there's the flavor that's like your parents where, oh, I'll just start a business to do the thing. It becomes so obvious, and there's like a lack of fear, and those frankly tend to be the best. The other tends to be folks that they will had to achieve enough success that they feel they can start to take the risk. And I strongly suspect that you're seeing that example from a young age is, what gave you maybe the precocity to do this. You also studied law. There's been a lot of really, really successful tech founders that actually were lawyers. So curious, like how that informed your perspective, and how soon into kind of your journey at Deutsche Bank were you thinking there has to be a better way, and I can build a company to do this?
Yeah, I think like to address the first part of your question, finance is a business where the opportunities are defined by laws and regulations, and so I think the legal background is actually really helpful to understanding the client context, and that's super important. If you kind of think about one of the things we get commented on a lot is like, oh, why aren't there more people doing this? But like traditional tech industries are actually very unregulated. So, like your standard, like I guess tech person, I think finds it difficult to appreciate the context in which like these financial services clients sit and how their businesses are kind of defined by the rules and the regulations. And then I think, in a more specific sense for PactFi, we mainly focus on private market assets. And in the private markets, the structure of your transaction is a deal. And these are kind of shaped, broadly speaking, by contractual sort of, you know, structure. So like contracts are at the heart of everything our clients do and what we do as a company. And it's kind of like why we're called PactFi, pact meaning agreements. So that's kind of like that context. And then I think for the light bulb moment, I think there maybe wasn't like a specific moment, but the overall experience built into this kind of realization of how much like different processes are connected to each other. And I think I had kind of like quite a great opportunity to sort of see the soup to nuts version of how the industry worked. I think in like a very typical journey, people actually get siloed pretty early. So you only see one aspect of the business of a larger organization. Whereas I started with Deutsche Bank in sales and trading, and I was a junior trader with them, which means that like my first job really was to run P&L and also process and book and manage trades, which if anyone has done that in loans, it's like quite a painful experience because it is like very different to, for example, if you were trading like public, equities and things like that. So, and then towards the end of my time at Deutsche Bank, I was really like more focusing on origination. So then you kind of see how the whole process is strung together and like how like problems at like the core data or back office level can impact you on the front office level. For example, none of this is like this was very well publicized at the time, but Deutsche Bank had a number of years when I was there where they had a lot of regulatory scrutiny over the way their processes worked, and it actually capped their sort of like lending limits and all of that with the Fed, which materially impacted the business in terms of like capacity and how aggressive they could be in the market. So, these things all kind of impact each other and inform the broader operating environment for our clients.
Mhm. And then would love to talk about your getting to know Alexa, how you two found each other. What was the thing in each other that you think made you decide to kind of take the leap and do this together? Your CTO, of course, for those that don't know Alexa.
Yeah, so I think Alexa and I have kind of somewhat of an unconventional Um, Meet cute, as they say. I found her on AngelList, which is now known as Well Found. And I think essentially I was getting to a point where I had like spoken to a couple of potential clients and I needed to make more something more substantial. And just given the complexity of the product, I thought that we really needed a strong tech lead. So I was kind of dual tracking both networking to like meet the right person, and also I just posted an ad for a CTO on AngelList. And I actually interviewed from that ad like probably like 30 or 40 people. But Alexa was by far the best candidate. Like in terms of like two things were really important that made us like feel like working together was the right step. One is that Alexa actually comes from the industry as well. So she was very senior and one of the first engineers that was hired at what is now known as Octus, but was formerly known as Reorg. And that is currently a Permira portfolio company, which is quite large. Um, and so she had kind of encountered a lot of these data issues firsthand when she was at uh, Reorg or now Octus. And so like the problem really interested her and she really understood how to build for the client set, which is the end consumers are kind of similar and they have like a set of concerns that you need to address from a security, auditability, and data perspective. I think the other thing was like culturally, I think we were a really strong fit. One of the things that it sounds really obvious that was really, really like that really wowed me with Alexa was like she kind of did what she said she would do when she said she would do it. So like we always like even now in hiring for our company, we always do case studies and a lot of the people I interviewed at that time like didn't show up or like never really did it or like was like 3 weeks late with like the case study and it was not like major. Like it was not like some crazy coding exercise. It was sort of a what would you do if you were a CTO type of thing. So that was our kind of story.
That's tremendous. In my own experience, even occasionally doing the things you say you will do is a massive edge. So it sounds like Alexa has a real superpower. Um, you sit at the operational center of this business. Depending on how you want to calculate the private credit market, but the headline number last year was $2 trillion. Uh, you know, I'd say the headline today is First Brands. How are you, from where you sit, are there insights you can share with us, like things that people are not talking about in the private credit market that would inform how you think about next year, the year after?
Yeah, definitely. I think there's a lot of really interesting trends. I think like actually what gets reported on the most in the market is a lot of headlines around private credit itself, which is very like in one way product focused for our clients, which I think is kind of a sign that their marketing engines are working really well. And it's like, and but I think the broader interesting thing that is happening is this kind of secular growth and establishment of alternative asset management as a core or maybe like even dominant component of the overall asset management and capital market industry. So there are two things which are interesting. People generally focus on the headline growth in AUM of this asset class. Um, and what is kind of happening is like it is growing at a time when public securities are shrinking. So, we're in the third year of straight decline for the amount of assets that's in sort of like public equities at the moment. And it's really a story of how the private markets have stepped up to take up this role in terms of supplying like overall investment assets to the broader economy at large. I think one of the things that's interesting to us is like our clients have been able to grow like this because they have been very innovative with both the investment vehicles they ride and also the investment assets that they structure and invest in. So basically what's that allowing them to do is they're extending their reach on both the supply and demand side. And that's kind of a competitive edge versus public securities, because securities are like very defined and you can't really deviate from like the structures and the characteristics. Like it's all about standardization. But what that innovation means at a sort of more internal or micro level is that they have been essentially outgrowing their operating structure and playbook and technology. So, for instance, they are writing investment assets, so like let's say loans of at least 5 to 7 year maturities, and they're writing investment vehicles which are at least 7 to 10 year life cycle. And now with the addition of these kind of like more wealth orientated products, a move towards more evergreen vehicles that have other complex like life cycle operating dynamics, like more frequent redemptions that you have to cater to. And so their tech and operating stack is struggling to manage. The businesses look extremely different to what they were, let's say, even 5 years ago. So one example would be like 5 years ago, the majority of deal structures in the market was a unitranche senior term loan. Nowadays, we see in the deal structure like at least 3 to 5 different types of structures. So you could have a revolver, a delayed draw, a term loan, a mezz piece, as well as an equity piece. And that means, if your system was set up to only handle one type of security, now you're doing 5. The fit for use or the coverage of that system has gone down from like, let's say, 90% to like 20% today. And so that creates this incredibly strong demand for new tools that can help support the business as it scales. And so that is a huge opportunity for us to step in. And I would say like that's kind of how we got our break, right? Like it is, not the preference of large, well-established, Fortune 500 companies to work with really small, early stage startups. And I would say like they kind of had to do it because there were no like other options. So that's kind of one of the more interesting and pertinent trends that we see in the market today.
Tremendous. Well, we're not so small anymore. And when you think about the technology that you've built, there are interesting elements because you not only you have to sort of you have to create a kind of digital security in a sense, or at least a record of the security that's been generated and the implications for the transaction, costs, data that people need to use to value a security. It has to be right. At the same time, there's a lot of workflow and there's a lot of elements of the credit underwriting piece and the diligence process that are somewhat qualitative. So, it feels like there would be a natural leaning or a draw to use agents to try and automate some of that. How are you thinking about kind of AI in the stack that you're building today? How do you prioritize the roadmap? And how do you maintain focus on the core value prop of what you're doing?
Yeah, I think there's a lot of focus on AI currently. Everybody wants to figure out a way to use it. I think the reality for most people, at least for our clients, is that the places where they can use AI or where it's helpful to use AI are different points in a longer workflow chain or a longer picture of like the work that they do on a daily basis. One of the tricky things for them is that, we're in an area with high compliance, particularly around information sensitivity and data. So there is actually like quite a high cost to them of trying to implement AI as standalone solutions. And so we've actually had requests from our clients like around embedding AI within our platform. And then we've also had some of them came at a time where we didn't really have the resources to like really start trying to do that at a product level. And then so we actually saw our clients trying to implement it directly themselves. And I think the learning there is that the cost to do that is quite high. And even for like large companies, it's very cumbersome and difficult. So for example, let's say one of the more popular use cases that's more well established is to use it to extract data from, like, for example, credit documents and things like that. And the thing is, if you try to implement that as a standalone, even if you use like a provider that has already kind of fitted that tool for the industry, it's still like a individual vendor that you have to get through vendor processing, and then you have to figure out how it fits in your overall stack and workflows. So, how do you actually get data into the system? Then it does whatever it does, and then once the data comes out, how do you get it into, like, 5 or 6 different downstream systems? So it's like quite a lot of work, and it's kind of painful. So it becomes out of reach for a lot of, like, particularly smaller players. So from our perspective, like, we're not like a model company. Like, we're not going to compete with Anthropic or OpenAI on model building. But I think where it's going to be really powerful is within the overall context of the workflow that PactFi provides, we can embed the tools natively into the workflow. So the experience for the clients is more seamless, and their actual, like, cost to access and implement is much, much lower.
Final question. Looking 5 years out, what's success for you look like?
Yeah, I think, for us, what we've kind of done so far is sort of showing people that we can deliver like a true sort of network product. And so, 5 years from now, it is kind of trying to realize the full potential of that. There is still so much more product, just simply because there's so much white space in the industry. But broadly speaking, we want to be, for businesses in the industry, a core operating system where you can manage your transactions, risk, and your clients. For the market, it's where, counterparties come to transact, find other counterparties, and get data. And for users, we want to be the system you log into first and spend the most of your day in when you come to work.
Tremendous. Thank you so much for your time, and we'll hopefully see you in New York very soon.
Awesome. Thank you so much, guys.
Be good.